Warriors. How's everyone doing? Alexandra, Kevin, how are you? Everyone doing okay? Let's have a good week. All right, so a couple of things I want to touch upon. I believe this rally in the end, this was Abe's resignation, and I think that's going to be a failing rally between here and 610. Hello, Hugo, Didier. So maybe a turnaround Tuesday play. I began to scale in at 95, and we'll see what kind of follow through we get tomorrow. Euro busting through, not quite a new high yet. 1965, so we're about 30 pips away. Looks like it may accomplish it. We'll see what happens. Looking, for some follow through into tomorrow. We'll take a look at that. One thing I did want to point out is that Euro Pound did not respect the breakdown, so it's into an I don't know category. When you do something like this and then rally back above it, maybe this was a false breakdown. So, I was looking for a lot lower levels, but it was based upon the breakdown. So if the contingency is negated, you get out of the way. So although I was selling it up here, looking for the breakdown, it's an evolving thing. So we had the breakdown, and now the breakdown's been negated. So the contingency that had me looking for 87.5 isn't there. So what do? I didn't feel like reversing, but I'm not going to be short and looking for different opportunities. And I think this could turn out to be an opportunity. I don't think that this is going to be the major low in the dollar, but check out the daily in the Dixie. Look at the RSI reading. We haven't quite made a new low yet. Low's 92.13, and so far I think it's 15 here. Line comes in right around 91.74, so that's another 50. So against this line, I'll be giving it a shot. That's going to be the first reading above 30, but it's going to be your second divergence, and this one's above 30. So this could set up for a bounce, although I do believe that the big battleground is going to take place down here in the 90 range. Okay, so I have a couple of, and it's starting to get a wedge look to it. All right, but I'm going to try this line, shorter term, a little 3 drive to a bottom, and that's not there yet. So that's another maybe 50 points from here. S&Ps, I have to, these RSI readings are pretty strong, but long on the shorter term TFs on both S&P and NASDAQ were under 70 at new highs. I know a lot of people that are talking 35.50, 36.40. We'll see, but I don't want to fade S&Ps until I think there's going to be some type of dollar rally. And although we're close, if you're just one day off in S&Ps, you could get buried for 40 handles. So it's not the type of thing where you go, well, I'll just put a piece on and just to pay attention, because I do that a lot. But in certain markets, I don't know, I just don't feel like I can do that, and just paying attention can be costly with a small piece. Moving over to gold, if I'm right about the end breaking towards 103, gold's come off quite a bit from 1980, and barely was able to take out this spike high. Silver's still acting so much better. above this spike high. And, I'm not surprised the gold has pulled back with what the yen is doing. So if I'm right about the yen, it's premature to short gold too. Yields with the yen up, US dollar yen up, yields are up a little bit, and this is a confirmed high, but maybe we're gonna stall here for a little while. I still think that we have higher numbers ahead. We've gotten up to almost 80. I want to see what happens at 62, which could happen if we get that yen sell off to 103.5. VIX is elevated, even though S&Ps are up. I still think it's an accumulation play, and that we top sometime here this month. Maybe you go out to October and don't go too far out of the money with calls in here. Aussie yen, okay, I'll take a look at it. I was paying attention to euro yen because the euro up until here, okay, new high here on the daily. Yeah, you know what it looks like to me, Nikita, on this time frame? See this? Still over 70, but this might be drive 2. So what's possible is that you get some type of pullback from here, and then the RSI, pulls back under 70, and then get one more push after that for a 3. And then the momentum may have been taken out of it enough so RSI stays under 70. I have a hard time shorting momentum over 70. So thanks for that idea. Actually, I'm paying attention. Steve brought up the euro yen, and as you can see, euro yen hasn't made a new high. Aussie yen stronger. So I'll be paying attention to when I think I have a dollar bottom and since I think the yen is going lower, so when I get that 50 lower in Dixie and maybe the yen holds up for a couple of days, to me this looks like a preferred short, because up until today, let's face it, euro hasn't made a new high yet, while Aussie has just melted up. Okay, compare that to this. So what's your preferred short? Yeah, so that's my preferred short. Even though EG is doubtful, it could shift into the pound being the preferred short, but this is just one day's action. Pound's already made new recovery highs. Any questions on anything I've covered so far? Last thing is I'm still waiting for crude to complete. We're up about a $0.50 here. I still want to see one more high up around this little bit above 44 up here, and we'll see what kind of RSI readings we get. This has been a struggle too. Okay, and I want everyone to subscribe to this excellent market product where you could just go down the list of so many different instruments. Let's see what Greg is saying about gold here now. There it is. This must be it. That's gold. So he's thinking that maybe we peaked today. So this is one of the counts where he thinks we could pull back to the 18 level. We'll see. I think Steve has gold as a triangle, and we'll look at it when he comes on, but a triangle would imply one more thrust up. So when I don't know what to do with something or I've missed something, I just take my hands off my mouse and wait for something to look cleaner to me to do something. And you guys should consider joining and becoming part of the community and having all of this research, support, resistance, all this work that would take you hours to do on your own. Maybe you're not lazy. A lot of traders are. They think they could do it without the work, and they're all looking for a secret just to have money drop into their account. And as I've said many times, the secret is there is none. It's hard work, it's perseverance, and living through adversity. And if that scares you, do something else. And with that being said, here's someone who's lived through all those things and has come out the other side for quite some time, even though we all hit speed bumps in our trading career. Blake, how are you? How's it going,
Hey,
buddy?
good morning, Coach.
Good morning, buddy. How are you? What are you thinking with Euro pushing here today?
It's hard to say. The euro is, obviously up against resistance. I mean, we have a little bit further to go before we actually break out. Let me get over here. Okay. So, as you can see, regarding the euro, I mean, we're getting up towards that resistance. It's 119.60. It seems like we're going to push it. It seems like we're going to be able to break out. That's how it feels to me. As I was telling the guys and gals in the chat room this morning, it's like, okay, the euro looks like it's going to break higher. I just, do you get long here? Today is a UK holiday. Yeah, I think we saw a lot of the end of month um, flows hit the market yesterday, but I think we actually pushed to new highs, and I believe we pushed to some of these bigger resistance levels up here. But we'll talk about those here in a minute. And it just looks like the dollar is continuing to stay pretty vulnerable. You were talking earlier, Coach, that you don't want to start fading stocks until you see that the dollar is going to strengthen. But it definitely doesn't feel that way at this moment, right?
Yeah.
Yeah. And I think that's kind of key here, right? So unless the dollar really starts to show that we're going to get some signs of life, then I don't know if you should be fading risk. I have to point out that we are still on what I feel is very key support. You can see that we're near the trend lows.
Yeah.
This is that multi-year trend line, and we're basically here. I don't know if I have the the want right now. Sorry, something just made a noise on me. I'm just double checking what it might be. I don't know if I really want to try to stand in the way of the dollar at this moment. I'd rather see something show me a reversal. And I guess when we go through the charts, I can help you identify, what that might look like, but it isn't what we're seeing right now. So Dale, sorry, it's so funny. It's like you don't yawn, or like for me, I don't yawn until I start talking. It's something about getting enough oxygen to your brain, right? Like when I'm sitting here, I'm fine, but when I start speaking, like I have to yawn for some crazy reason. I'm sure there's some medical terminology that explains that. So anyway, that's kind of how I feel about the dollar. We're going to go through the bias chart here in a second, but I'm going to reiterate what I saw this weekend, and I think this S&P is pretty, I mean, how do you feel about the S&Ps where they're at? I mean, are you willing, Coach, to take the risk about shorting the equity markets here?
I might do it with options, and I think a good way to do it, just in case you're early, is to go out to October, November, and buy VIX calls That way you're not taking your day trade hits of 20 handles, and you could sleep overnight knowing you have limited risk, and you could be wrong for a week.
Yeah.
You know what I'm saying? Instead of having to be perfect.
Right.
Yeah. So, I mean, short-term TFs have some non-confirmations, but there's still an awful lot of mo. But yeah, I'd be looking to buy VIX calls or puts. I think it might be a good time for options. With the VIX low, they're not expensive, and some people are buying them for insurance, but you could also buy them for speculation.
Yeah, yeah,
So
and
yeah,
I know, and I'd agree that that's probably buying some puts. You just got to be careful with your time. Just
yeah, you have
any
to
type of time.
buy time. Yeah, you're right.
You have to buy. You have to buy time, but you can't let too much time go by, so it deteriorates
Yeah,
your,
yeah.
your.
I mean, in my cynical days, I had an expression about options that options are like relationships. 90% of them expire worthless. But
Wait,
there's
are you when you're talking
10.
relationships? You're obviously talking female or opposite sex relationships.
Well,
Uh, all right.
I'm talking
Well,
all.
oh, yeah. So I, we'll uh, take a look at this. Let's just start with the bias
That
chart right
is
now.
one beautiful looking megaphone.
Well, it is.
The only thing that bothers me is a possible overthrow
Oh,
on
I mean,
these lines.
that's always possible. I mean, it's always possible. Like this right here. It's
Yeah.
and remember, at this point, you didn't know you were in a megaphone either. This is just
No.
you're really just more or less connecting the
Right.
resistance levels and just assuming. I remember when I first drew this out. When I
Oh
first
yeah.
drew this megaphone pattern out, I drew it like this.
Yeah.
Right, because I was trying to keep some sort of symmetry. So when we hit
Right.
this peak last year, I was like, okay, maybe this is a megaphone pattern. But because the sell-off was cut short, I say cut short, but it was, the sell-off didn't quite reach that other level. I think the megaphone maybe looks more like this. Yes, we could definitely overshoot. But here's the easy way to really identify the megaphone right now. Is this the time to be bearish? I mean, you could take some risk right now, but where do you really get bearish? Where is the place where you really get bearish? It's below here,
Yeah.
right? Whoops.
Previous high.
Yeah, the previous high. It's the 3,400 level.
Yeah.
So, I mean, realistically, while we're above 3,400, it's at risk of going higher. But as I pointed out to you guys, this is what I drew this weekend. And if you go like this, right, first move higher, and the reason why we peak here is because we actually made a lower low here. Do you see it? It's brief. I mean, it was very, very brief, but that would be AB, right? CD takes us there, right?
Mm-hmm.
Then you have this one, low, high. So, I mean, they all point to the same direction. They all point to right here.
Same
AB
level.
equals CD, AB equals CD. I mean, we're all, it all says, 3550, 3560. The only really the big issue that I have, Dale, is when you have so many, like in this case, we have a lot of indicators pointing that we're going to 3550. We might come up short. I mean, everybody's trying to sell up here, right? So, I try to explain it to you guys in drawing, right? So let me draw for you.
They also have the micro product now, Blake, that you're not going to get hurt if you're 30 handles early. You know,
Yeah,
you could
yeah.
even sell another one. You know,
But
so
but let me kind of illustrate for you. Like let's say you know everybody sees the AB equals CD, or we all know that 3550 is resistance, right? So you got you know sellers here, sellers there, but then now you're starting to get a ton of sellers are lining up, right? And so now you get you know so many sellers up as you approach 3550. The buying tries to chew into all these sell orders, and they can't get all the way through all the way to you know 3550. So you end up failing at 3540 or 3530, you know, something like that. And so that's what the potential is for you know if we're going to fail up here, is that you know you got a bunch of you know orders that are all lined up around the 3500 to 3550 level, and maybe we never end up chewing through them. So you know we'll see, obviously, but the time to be bearish S&P is not current. Like you can speculate and you can try to you know pick the top if you want, but really the time to be bearish is back below 3400, right? That's as simple as it
let
gets.
it prove itself.
Right. So, but let's write down some resistance. 3550, I think, is pretty key. And again, this is more of a, you know, this is when I say 3550. Can you hear me okay, Dale? Can you hear me all right?
Yes. Yeah,
We can hear you just fine.
Okay. I'm pulling my microphone away from me just a little bit here. Sorry, guys. Shoot. Bear with
and
me.
you know, Steve's a big proponent of reversals happening near the beginning of a new month, and that starts tomorrow, right, Steve?
Yeah, statistically, they have a higher chance of happening
Early in the new month.
Very early or very late in a period. A month is
Okay.
one such a period. Than they would have otherwise. I mean, we know that as a fact. So yeah, I mean, reversals that happen like at the very beginning of a month, you know, like have a bigger chance of being the real deal.
See what I've learned from you guys?
All right, sorry about that. I had to tighten my microphone down. It's the way that the clamp holds down onto my desk, I have to actually pull out my jigsaw and do a little bit of work with the microphone clamp, which isn't going to happen right at this moment. So okay, thanks for your comment, Stephen. Good morning. So let's go into, you know, let's figure out where all these key levels are. So S&P for support for today, I think that this is going to be probably some pretty decent support through here. Is going to be what is that, 3484. So let's just write that down, 3485. Okay. We are obviously bullish. Okay, let's go into the euro. So the euro key resistance comes in at 119.65. So that's it. Support for today. Intraday support is going to be down here, 118.80. Okay. And did you just yawn on me? You did, didn't you?
I
Cable.
did.
Did. Cable. I was trying. I don't blame you. Cable 134 is going to be the 161% extension of that most recent move down, and 132.50 is the breakout point. So that's it. And you know the cable's, it's bullish. I mean, we're breaking out. So you know, I mean, it's very challenging because it was just all over the map last week, but it you know, it closed the week bullish territory. So Aussie, well, this has been a big breakout in the Aussie too. While we're above 73 cents, it's bullish. Next real resistance, 127% extension. Now this is a 127% extension. Hold on. That is of this entire move. So let's just keep that in mind. So that comes in at 74.6. And we're bullish while we're above 73 cents. 73, actually it's 73.15. That, because that's the throwover point, as Dale likes to point out. You know, if we break back below that, that means, you know, that's going to be a little problematic for bulls. Kiwi, breakout point here is 67.10. Next resistance is the 127% extension of this is 67.75. Oops. Okay. Dollar Canadian, the dollar Canadian actually it continued to break lower. And frankly, while we're below this support, which is 31.30, even on Friday, we rallied right to it and stopped. So there's, I got to show you this. These support levels, remember, these come all the way back from last year. So there are some support levels that are sitting below here that we have to be aware of. This comes in at, what is that, 30.40. $130.40, and while we're below 131.30, we have to remain bearish. Swissy now, or here, I'll just move my way down this way. Peso, the peso broke down. I was irritated about this because I had a long right through here. And it look, I mean, if you look at the daily candle, this, I mean, let's minus Friday's move, right? This is how irritating this market is. This is Thursday's move, a big white or green, depending on what color your candles are. We call our candles black and white because black and white is the traditional colors of the charts back when there was no colored charts when you print them out. So we reference them as black or white. But you know, some of you use green or red or whatever color, like this is, you know, blue and red. It depends whatever you're using, but white bullish candle. Take a look at what happened on Thursday. We had an outside bullish day, right? Off of support that has been holding since June. That's a natural get long. We should, you know, bounce back up towards resistance. Friday, we end up breaking lower. That's how frustrating this market is. And, you know, look, I was long right through here. I had a good price. Fortunately, I did take a little bit of profits up here, but I did not expect the move to completely give up. And that was very frustrating on Friday. That was, for me, it was one of those, I'm going to throw my computer out the window type of frustrations. But now we are trading below the breakdown point, which is 81.85 or 81.90 would be like what we've been holding on a daily basis. So I'm going to write down, I'm sorry, 21.90. I'm going to write down 21.90 as resistance today. While we're below that, you have to remain bearish, but you know, just be careful. The downside has been very limited thus far. The 88% retracement of this move comes in at 21.67. Okay. Working our way down. Here's the Swissy. So Swissy is approaching support. 90.10. remains bearish.
Not that it's super important, Blake.
Yeah.
But we just got Canadian building permits and they tanked. The market was expecting 5.5 positive, and we got -3. So a big miss.
Oh, a big miss, huh? Yeah, that didn't do anything for.
Yeah, in this type of markets, no surprise really, but.
Right. Yeah. Market just doesn't care at this moment. Okay, we're gonna get. Thank you very much, Steve. Resistance right now for the Swissy is 90.66. That's the breakdown point from the triangle. Dollar yen. So the dollar yen. Dollar yen came off pretty hard on when we heard that Abe is going to resign. Suga, let me get his full name here.
Suga Daddy.
Yeah. Yoshihide Suga, Chief Cabinet Secretary, is going to put is set to enter the race, and so that is like the favorite right now. And the reason why the dollar yen is rallying is because if Suga enters the race as a favorite, and he's an LDP, the Liberal Democratic Party, he basically is an Abe continuation. So that's why you're seeing this yen weakness. I still think that there's a lot of risk here, obviously, because it's an election, and there's other candidates entering the race, but he is the front runner, I guess. So if you're wondering why the dollar yen is rallying now, I do think that we're going to struggle as we get back up to 106.25. So remember, this is the previous channel resistance, and this is a false breakout. So I'm going to write that down. 106.25 support. We basically held. We didn't break into new lows at this 105.10 level. We went as low as 105.20. So I'm just going to write down 105.10 as being support. Let's go over to the dollar index. Here's the dollar index. Again, as I was pointing to you guys earlier, this is a multi-year trend line. We're right on support here. So that comes in at 92.10. You have to remain bearish while we're below 94, and specifically 93. I know we've been writing it down 93.50, but 93.50 here. Okay. US dollar, Norwegian krona is bearish. We're skating across this broken trend line, but that doesn't mean that we can't go lower. So 872 is support. And resistance. Well, resistance at this point is going to be all the way at 905, 906, but intraday 885. And we have to remain bearish. And let's just take a real quick look at gold. So gold continues to hold that uptrend line. You guys don't remember, don't recall. We talked about it on Friday and on Thursday and on every day since then. Steve had pointed out that we were breaking out, on Friday. He had me bring this trend line down here. I still think that we could have some sort of more symmetrical resistance. So that's why I think that any move up here towards 2000 is probably going to offer really good resistance, and we're going to have some more of like a symmetrical triangle type of thing. But as you can see right now, we are struggling even to make it above. This is a 50% retracement, basically, is 1770 or 1975. So I'm going to write down 1975, then 2000. It is still bullish, and while we're above currently, I'm just going to write 1910. We have to remain bullish. Okay. So there you go. Your bias chart is done. Dollar yen's ranged. Oh, dollar index. You know what? Dollar index. This is bearish. Sorry. There we go. Okay. Now that looks pretty directional, doesn't it? So, should help you guys out. All right. So that is it. And I'm gonna say something on a personal note because you guys are probably wondering. I did lose a old friend over the weekend, and he was actually out. He was out swimming in the Pacific Ocean, a place where he swam every day, and he didn't come back in. So he would swim out in Dana Point, California, with flippers every day. And then one time he went out and the riptides probably was too strong, and he passed away. Anyway, he was a mountain of a man. I mean, the guy was like, he looked like he could be an NFL football player kind of person. We had a falling out a few years ago based on how he treated another good friend of mine. And so the reason why I bring this up is because you guys are probably like, those of you that follow me on Twitter probably are wondering. And since a lot of you are on Twitter, most of you are on Twitter, I figure I'd just address it. And the one thing I wanted to point out is, I'm upset for obvious reasons, more for the family of Jeff, who I knew since I was 23, I guess, and and he was really close with his family. But the point I wanted to make here is that there's a lot of things that were left unsaid, and to me, it weighs heavily on me because I never got to get that off of my chest. We never got to resolve those issues, and that's kind of like a life lesson to me, is that I can't leave anything like that unresolved with people in my life. So I just wanted to express that to you guys because I think it's been upsetting to me for a lot of different reasons, but that was like one of the big reasons for me personally, is that I wish we would have had an opportunity to talk things out. So anyway, I just needed to mention that because like I said, I'm sure a few of you were wondering. Anyway, Steve, Dale, I'm gonna pass it over.
Thanks for being open about that, Blake, because someone may have heard you today that's going to reach out to something that might be broken and at least make the attempt to heal it so they don't have regret.
Yeah, there's a couple relationships in my life, very personal relationships that after the events for me this weekend is going to speed up the process of how I deal with those moving forward. And because I don't like, it's not a good feeling.
It's strong.
I'm sure many of you know exactly what I'm talking about too. So.
Yeah.
All right.
All right, Blake.
Hey guys. Thank you. Have a great trading day. I'll see you guys on the daily roundup in about 4 hours. Steve, Coach, and I think Stelios is here too. It's all yours, guys.
Good morning,
Blake.
Thank you, Blake.
Good luck today,
Thanks,
Blake.
guys. Have a great day.
Thanks, guys.
Guys, before you get started, just following up on this, we're all here to make pips and make money. But, when it's all said and done, we're not going to really remember our best trades. We're going to remember the people we laughed and cried with, that we had relationships with.
Very true.
Very true, yes. Yeah.
All right, now let's talk about money.
We humans are social animals. There's no question about it.
That's what's so bad about COVID.
Yeah.
Yeah, it's one of the things that are really bad about COVID. Yeah.
All right, so I was a little surprised by EG, Steve. I thought we had a breakdown, but it almost looks like a pretty good reversal. I'm not sure, and maybe you could start there and show me what you're thinking now. Oh, it could. Let's see.
Yeah, I mean,
you have a different line. Yeah. Okay.
Yeah, no clear indication that something is really different.
Okay.
You know, we didn't have any kind of majestic breakdown. There's no question about it, because the speed at which we've been moving lower is unimpressive, the least to say.
Yeah.
But on the other hand, I don't think that today signals, you know, that we're down to the downside. I think we need to see a lot more. So I think that EG might need a lot more patience in order for it to start playing out and give us a proper signal to know what's happening here.
Yeah. So you're
so
strongly neutral right here.
For the time being, yeah, I would be bearish if the move through the triangle had started gaining momentum, or if I saw like a big candlestick, you know,
Yeah.
following that. But seeing this type of price action, you know, it's what we've said multiple times, right? It's one thing monitoring technical signals, which come usually from, not always, but usually from specific breakouts of patterns. But it's not only what type of a breakout you get, it's also getting the proper price action that in essence confirms that something is happening. So, you know, it's not only how, if the market does something, it's also, you know, how it does it.
Where would
And
a touch of that triangle blue line underneath come in, say tomorrow? You know that
it's
it broke.
quite close, like 90 cents, let's say.
Okay. Thank you, bro.
No, a fraction lower than 90 cents.
I
Stelio,
think
did
we have to
have,
remember, yeah. But so talking about pound, we have to remember that pound pairs are going to start trading a little bit more nervously than usual, because remember we have the deadline for the Brexit negotiations at the end of the year. Obviously, if something gets decided, in order for it to get ratified and implemented and all that, it has to be done before. So I think we're entering the last probably 2 months of really they have to get it done. So it feels like leading into October and November, we have UK/EU, we have the US holidays. Feels like it's going to start brewing a little bit. And I was also
one
reading
of the
that,
few positives of COVID, one of the very few, is that we got a dramatic reduction of the Brexit drama.
yeah. Nobody's
And I'm
talking
really
about it,
not
right?
looking forward for that to come back again.
Yeah.
Well, I know, Stel, you're hoping for higher levels anyway to put on a macro short.
Yeah, I want
Right.
92, 93 if we can get
Yeah.
back there.
For
I'm okay
Europound,
with it.
yeah.
Yes.
Yeah.
But yeah, I mean, markets are a little bit choppy again, more of the same. There wasn't any major news out. I read that Trump is actually closing the gap a little bit to Biden.
Yeah, he is,
I think
actually.
it's going to be a nail biter, it seems, again. And this time around, I think we all know not to trust polls, given what happened with Hillary last time around. But it's going to be close, and but otherwise, you know, it's been pretty quiet. It's a slow risk on again. Metals going higher again, and just more of the same without any real trigger yet. Now, I am also reading that there's, you know, COVID is still there, and the rate is actually accelerating in quite a few countries, and you know, by no means
India.
is it over. India, yeah, also the countries where schools and universities have opened up. Well, that's been a disaster, and we're opening up here in a week or two where they haven't decided yet, so we're bracing for that.
Yeah, either next Monday or the Monday after that.
Yeah, so this thing is not going away. The good news is that it seems that the mortality rate is going low. It's going lower, but maybe that's because there are way more tests being done now. So basically,
I think it's a combination, Stelio.
It's a combination. Yeah.
The mortality rate, we had said since the very beginning, it was completely unrealistic because, you know, they only found out about people that were getting sick, so, you know, exhibited symptoms and usually like, you know, serious symptoms. So of course, you know, when the sample you have is very small, mortality rate seems to be very high. So now it's a combination of you know, being able to find out about a lot more, that some of them are even asymptomatic. Also, you know, obviously doctors gain more experience in fighting COVID and reducing the mortality rate even among people that start exhibiting like more serious symptoms. So I think it's both.
Yeah, and no doubt
It's got to be a tough decision on what to do with your kids on this, huh, Still?
well,
To send them back or not?
I don't think
For-
we're going to be giving an option. So
Yeah,
I
for
see.
me,
send
for
them.
me, in any case, it wouldn't be a tough decision anyhow.
Yeah,
What
yeah.
would
I
it
mean,
be?
you have
You would
to at
send
some
them
point.
back?
Would be send my kid to school because his social development and everything else
Okay.
is way more important.
Yeah, to counterbalance his father, right?
Yeah, yeah.
I couldn't help myself. All right, go ahead,
I
guys.
know you couldn't.
Otherwise, data-wise, we had a few little things. China manufacturing PMI a little bit worse than expected. Australian, who cares about data? Really nothing. German CPI 0.1 better. I mean, it doesn't matter. So it's been very quiet, and really, I think we're gonna be just grinding into the end of the week where we get payrolls and the usual drama. But otherwise, I wake up in the morning for the past couple of weeks, and it's the same. And it's the same. It's very hard to actually say, okay, this has changed in my macro view and this and that. It's a bit of the same every day, and we just wait. And it's one of the toughest things to do, is just to sit on your hands and do nothing. But that's what I'm doing at the moment.
Yeah, it's one horse pony. I mean, risk drives the rest. Since the first month after COVID, that we got like the ultra strong response from central banks, and now that's the name of the game. I mean, that's why the Fed even like moved the goalposts once again, having to do with inflation, because in essence, what they want to show is that they've got rid completely of the supposed role of being counter-cyclical. So in essence, they've told us that there is not even a chance that they're going to attempt to raise rates again in advance when they believe that things are holding up. And that keeps a bid in the market that now is more or less certain that the Fed is not going to act. Not only the Fed isn't going to act as a headwind anymore, but is not even going to like close up the spigots at any given point, even when things seem to be very hot. Now, will this be the actual scenario? Will this be how things unfold? Most probably yes. Now, is this enough to keep a bid in the markets forever and ever eternally? No, it isn't. But as we've said since a couple of months ago, I think that the main theme that we've seen having to do with risk assets is going to continue, which is that the vast majority of the days we're going to have like a slow drift higher. And there's going to be occasions that the market is going to be spooked by A or B or C or whatever. And we're going to get sharp sell-offs that, given what I already explained before, soon enough, after a few days, a couple of weeks, worst case scenario, the market is going to be considering them amazing buying opportunities and rinse and repeat. In any case, we've now reached the I'm not going to say it's a juncture exactly, but from a technical perspective, seeing like this overthrow from this ascending wedge, seeing this channel here in the Nasdaq, seeing the fact that the VIX has actually now been positive correlated with the S&P for quite a few days, seeing that the DSI is at 90, seeing that the city euphoria index is at, I think that at all-time highs. I think that we're much, much closer to the second part of, the cycle I described, which means I don't know what the catalyst is going to be. I don't know what's exactly going to happen, but I'm pretty sure that, a sharp sell-off should follow rather soon, which, yeah, the market is 95% going to find as an amazing buying opportunity. But from a risk reward perspective, being long up here, makes no sense. Where would you put your stop loss? I mean, what do? Just buy and close your eyes and not place a stop loss and just buy more and martingale? it will probably work, but you know, if your plan is to trade like that, you know, at some point, sooner or later, doesn't really matter. One of these trades is going to completely blow up for you, and you're going to lose all your account on whatever profits you will have made up until that point. So that's not a viable strategy. In any case, Blake mentioned before, so I'm not going to go over the main stream FX pairs. Just, you know, very briefly, Euro USD is attempting to break out higher once again. That's not a big surprise. 120.30 and 120.50, quite an interesting upside area. Cable has already broken out. It made a move first from that confluence of resistances. So in essence, the dollar clearly, and going to the DXY, the dollar clearly is showing what we have been saying, that as long as we stay below 94, the chances are for a breakdown. I do think another sell-off, which might even prove to be sharp, is a very likely possibility of happening in the very, very short term. A move towards like 91, a little bit lower, is you know, a very high possibility scenario, which would temporarily imply that, you know, what we've been seeing is going to continue. You know, unfortunately, this is the period of time that you need to exhibit more patience than usually, because these are already like fatigued moves, and you know, chasing them, you know, either we're talking about the equity markets that we just covered, or the FX market, is probably not such a good idea, right? Now, Blake expressed some skepticism about if this is an actual breakout in gold, and I do share that skepticism 100%, because this trend line resistance is not that reliable. I mean, it's just like 2 points, right? If it had more points, it touched price, I would be more comfortable about it. That's why I said that, you know, for me, 1980, which is also like a horizontal support resistance area, is key. So I'm not convinced. I'm not buying this breakout. I want to see a move above 1980 and the daily close above it. But having said all that, and you know, all that skepticism, I have to tell you that this trend line support does seem more important, right? Because it crosses and meets price at like 4 or 5 points. So I trust this trend line support more than I trust that trend line resistance. And as long as that's the case, I think, you know, turning bearish is also not a good idea. I think as long as we trade above 1920 in gold, you know, you either want to be neutral or you want to be long. But being short, you know, doesn't really make technically any sense here. Not to mention fundamentally. Fundamentally doesn't make any sense in any case.
Silver looks better, yeah.
Silver looks better, yes, as we speak. I am paying close attention to this $28 level. It's a horizontal support resistance area, not only in this case. It's been in the past as well. So, you know, consider that the equivalent of the 1980 level I mentioned for gold.
Steve, I have a question
yeah,
regarding this formation. If they do turn out to be triangles, could they be a triangle wave 4 and one more high complete?
Sure, absolutely.
Okay, that's what. Oh, thank you.
Absolutely. There is a chance that we're going to see a deeper. Listen, if this is all the correction, it's not enough. You know what I mean? So we should be seeing at some point in the not so distant future like a deeper correction, because that was not deep enough. It was decently deep, but given the fact that it lasted like for just a few days, and given the fact that this rally in essence has been ongoing without any real breather since like mid 2018, since like 1160, you know, at some point we should get some type of either a deeper pullback or a way more prolonged type of consolidation. But, you know, as I think it's not a good idea to fundamentally try to be short stocks, not because the economy isn't lousy, the economy is the worst it has been for decades, and not only in the US, right? I'm not only focusing in the US. In the US, it's worse than it was, definitely. I mean, the deterioration in the economy in the US has been far greater than any other developed country. And, that's very apparent if you look at the debt, if you look at the deficit, if you look at, many of the reliable indicators. But, it's a global problem among Western countries. But the reason why you shouldn't really be fighting this is because, inflation will keep stock markets rather decently bid. And keep in mind that in nominal prices, stocks might continue going up for years and years. Now, the key word there is nominal prices, right? Because the time will come, even if that's the case, that especially foreigners that will have to convert like their money in dollars to buy stocks, and then in order for them to close their trades and in essence pocket any results, they will have to transfer back the dollars to whatever currency they initially used. That uptrend might not end up looking that profitable in the end. But that's a different story. We're not there yet, although I do think that there is a chance we'll be there quite soon. So for the same reason, you shouldn't really be trying to fight precious metals, because they both respond to the exact same trigger, right? Which is, an incredibly inflationary environment. I think soon enough that inflation is going to also end up spilling to the CPI, to the PCE. And I think the fact that the Fed knows that is why they're moving the goalposts once again. Right, I've said in the past, at some point we had this conversation about inflation, and I said, I should have done it already, by the way, but I said that I would do a webinar about it. Remember at some point, the role was not to have deflation. Then, they changed it to like not let inflation run towards 2%. Then they made it 2%. Now they want it to be more than 2% based on the fact that we didn't have enough inflation in the past, which is just stupid. And, I'm pretty sure that once we get to like 3%, they're going to figure out something else to say. But I think by then the game will have been lost from the side of the debt markets, but that's a different story. In any case, let me go through some of your questions. Is it possible that the USD just keeps sinking? Yeah, it absolutely is possible. But nothing moves in a straight line, right? Nothing moves in a straight line. So at some point, we're going to get some dead cat bounces. Or in the equities, we're going to get some sharp sell-offs, but that doesn't mean much. Platinum, people are asking about the rest of the metals. Here's platinum holding the channel. So, nothing bears to write about or talk about. Here is palladium. I'm watching both the larger symmetrical triangle and the smaller one contained in that. I think that can prove to be a very, very nice trade, right? A very nice technical trade. A break to the upside or to the downside should produce some very nice follow through. So I do think that that palladium is worth being on your watch list. Here is copper. Copper just doing its thing. I mean, we had talked about multiple times that that consolidation seemed to be 100% corrective and should get resolved to the upside. We've already seen that happening. So next upside target, 315. And copper keeps going. We know, of course, that it's very nicely correlated to the Aussie. So no real surprise if you see, what the Aussie is doing is more or less what copper has been doing. And, traditionally that has been a correlation that still stands. Other correlations have broken down, but not this one. There's another friend that's asking about natural gas. Natural gas found resistance in this confluence, 88.6% Fib, and horizontal support resistance area, roughly at 270, 275. What's this channel trend line support?
Are you still long?
No, I booked my profits
Yeah.
at 250 change.
That was a
And they
great
said,
trade.
yeah, I mean, it made me more than 20% in very little time. So, that was a great trade because, okay, yeah, I get it. Interview time. So, who do we have today?
First time guest, Austin
Yeah,
Silver.
Austin Silver. Is he
Do
long
you like
silver?
his? Huh? Well, I'll ask him.
Yeah,
All
let's
right.
see if he has any faith in the name.
Okay. All right. Thank you, Steve.
Tell him that soon enough he's going to be worth gold.
I'll tell him that the ratio is working in his favor.
Absolutely.
The gold silver ratio. All right,
Yeah,
Steve.
indeed.
Thanks very much. Austin,
Thank you, Dale.
welcome to FACE, and I'm going to get you set up now. Make you panelist. Appreciate you taking time out to be with us. I don't see the unmute.
It's going to come
Hi.
up. Give it a few
Okay.
seconds.
Hi, Austin. I just have the more button here.
Yeah, there it is.
There
Okay.
we go. Okay.
Yeah, now you can unmute him.
Hi,
Awesome.
Austin.
Can you guys hear me? Hey, Dale.
Got
Yeah.
you, buddy.
How are
Got
you guys?
buddy? Good. Have you ever used Zoom, Austin?
Yeah. Do you want me to turn my camera on or just screen share?
Screen share, camera, whatever
You can turn your camera on as well, but let me, Dale, promote him to co-host. Otherwise, he won't be able to set a camera.
So go with your screen.
Cool. We'll throw you right to my charts then. Right what I was
Okay,
looking at
Austin.
this morning.
So a pleasure meeting you, Austin.
You too, Dale. Thank you for having me on. And Steve, I was
Yeah.
listening to you this morning. I appreciate your insight, man. It's very insightful.
Thank you, Austin. By the way, now you can also share your camera if you want. I
see.
think so. Let me see. No,
Yeah,
sorry.
show-
Now you can.
Okay.
I
There
got
you
Show
go.
you have a good pandemic haircut there, Austin.
Thank you. Well, I'm
You've
down in
gotten-
Florida, so we have barbers open. Everything is functioning here. I'm very grateful for that. So keep it moving.
Okay, buddy. Well, I clicked on your YouTube channel and
Yeah.
checked you out a little bit. I'm always interested in how people got into this industry, what they were doing before,
Mhm.
and their trading journey. How we all start off flailing around. Some of us are fortunate and have good mentors. I know you're a mentor, educator. Tell us what you had to go through.
Sure. So I actually was selling life insurance, like as a traditional, like financial advisor kind of thing. And that's
Right.
what turned me on to day trading, because as an advisor, I was young. I was 19, 20 years old. No one was buying life insurance from me. So I had to figure something out. So I started studying for my Series 7 so I could sell stocks and mutual funds, because the people that I knew, they had a couple $1,000s to invest, but nothing substantial. But at least I thought, hey, if I have a Series 7, maybe I could sell to them. And it ended up showing me in my studies what day trading was. And I fell in love with it because it lined up with so many of the things that I knew about myself even at that time, you know what I mean? And then as time has developed, it really has just become so parallel to who I am as a person. I was talking to my younger brother who also trades about this the other day, and I was like, I don't think I'll ever not trade, And it was funny because I'm talking to somebody here, Dale, who you have 40 something years of experience trading, and you know what I'm saying? You just never stop if you have the bug. So that's where I caught it, and that's where it's taken me to. Yeah.
Yeah, it's like being in the mafia. You're
Some
right,
kind of
Mike?
mafia.
That's it. You can't leave.
Exactly.
And I've taken
Exactly.
breaks, but even when I was taking breaks, I was still market watching.
Of course.
So Hotel California, you could check out, but you could never leave.
Yep.
So did you have any? Who influenced you? You found a very important fact out early. That day trading was going to be your niche. A lot of people, I've interviewed Jack Schwager, and I asked him what's the most important thing that traders should know, and he said find a trading style that fits your personality. Who helped you with day trading? How did you come to use sticks? And would you consider yourself self-taught, or were there any influential people in your life earlier in your career?
It's a great question. The first person that always comes to mind is Tim Sykes, because without Tim and his outlandish marketing for penny stocks, I never would have really learned that there were educators on stocks. I would have thought that you had to go to college or something like that. So when I saw him, I bought a couple of his video courses, and it taught stocks and penny stocks, but I loved the technical analysis. I loved the understanding of volume and exponential moving averages and candlesticks. So that's where I kind of caught that bug. I then went from his courses to a few other stock guys. Cameron Foose is one of them. And I just tried to consume as much content as I could, because I'm a big, I don't know if you're familiar with Gary Vaynerchuk, but I'm a big Gary V guy. And he always is in this mindset of like, you got to eat a lot of crap in order to finally get the thing that's so, so valuable to you as your destiny, as your purpose. So I knew I was just going to consume a lot and try to figure it out. So I went from these penny stock guys to YouTube, and YouTube had a decent amount of Forex stuff, but not a ton. So what really helped me was trial and error, but also working with a community of people that I found on a Telegram group. And they were local to me, and they were also trading Forex. So we all used to meet up at my house and trade and try to do markups together and figure out trade ideas and just learn and study. We shared books and stuff. So I think it was partially my education comes from like the technical side of the stock guys and stuff like that initially. And then I developed it into my own kind of thing as time went on through YouTube and reading. The other person I have to give credit to is Mike Bellafiore, because I think the technical stuff and all of that side of trading is not easy to grasp, but it's simple. The harder side is the risk management and the psychology that you have to apply every day when you show up to click the button. So Mike's book, One Good Trade, is like my all-time favorite trading book. I hope one day that I can write a book that is as influential as that book was to me for other people, because everything just clicked. Like that is the moment, if you ask me, like I see that as the turn when I was like, why am I trading so much? Why not just, it changed so many things for me. If you read my shirt today, it's do less, do it better, do it bigger, which is like my philosophy of trading. Trade less, trade better trades, and trade bigger as you grow. So that philosophy is really born from Mike's book.
Yeah, less is more, and
Exactly.
I teach. Tell me if you agree with it. That I tell people to write it down. I will miss trades every day. That's okay, because there's always another one around the corner.
Absolutely.
And I'm a big believer in communities and mastermind. And that's what you had. You had a little mastermind group that was meeting at your house. And, we only have two eyes, right? Mm-hmm. So when you have a community, you have more than two eyes, and there's something you may not be paying attention to that one of your contemporaries can point out that could be compelling. So, I appreciate that. So who was the author of that book again, Austin?
Mike Bellafiore. He's the co-founder of SMB Capital. They're a prop firm that trades stocks mainly in New York City. It's a really great book. And he also wrote another one called The Playbook that's really cool too. But just to comment on what you said there, Dale, about I call it selectivity, basically, which is like understanding that, yes, you're going to miss trades and you're going to see money move. I mean, you have to be okay with that as a trader. But where I really felt comfortable with it, and where I see other people that I've kind of positioned it to this way find comfort in it, is like, you as a trader, once you consume education, consume something, are going to try to apply that. But that doesn't mean you're going to be right every time that you apply it. You can't think that every time that you have a trade idea, it's going to be correct. So I have a checklist of questions that I ask myself before I trade. So some of my trade ideas, like the one you're looking at on my screen right now, this was just it was something where I would go through the checklist, still see the risk reward opportunity in it, but maybe I don't take that trade because it isn't as probable as it could be. And I call that selectivity, saying, okay, this could move and I could make 30 pips here, but I'm okay if I don't, because it could be better. And I want to put my money in the highest probability trades. So that's how I rationalize it.
Yeah, I call it my higher conviction trades. What do you think about this? A lot of people feel like they have to be portfolio traders. And, they may have 8 different positions in different instruments. And when I started in the business on the floor, I knew guys that never left one trading pit and knew one market like the back of their hand and never really had to diversify. And especially if you're a teacher or mentor, you teach for people to narrow their focus, especially at the beginning, to get to know a couple markets instead of trying to understand the whole jigsaw puzzle.
Right. I think portfolio trading has to fit your personality too. For me, it as of where I'm at now and where I was when I started, I still consider myself relatively young. It just doesn't fit me as a mindset, like how I live my everyday life. So day trading for me fits just my characteristics. I wish I had better vocabulary. I wish I was more educated to explain that cohesion that you need between your trading strategy and your personality, but it's so similar. I've seen people try to trade strategies or be in a sense like swing traders when really they're a day trader personality and they suck at swing trading, but then they crush it at day trading. You know what I mean? So I think you have to align it with your personality too.
Okay. As a day trader, are you a believer in partial profits, or are you
Absolutely.
all in, all out at targets?
So what I'm doing right now is the best that I've had so far. I've tried it a couple of different ways, but what I do is I grade my trade setups simple, A, B, or C. I'm more often than not just avoiding the C setups completely. With those A or B setups, depending on which pair it is, because I get better spreads on certain pairs, I would give it either 2 or 3%. That risk then would be where the stop loss would be. And as that trade develops, depending on that grade, I'll take profits at different R multiples. So for B setups, once I'm up about 1.5 to 2 R, I'm taking partial profits and moving my stop loss up to mitigate the risk. And that's what's really been a game changer for me. And I know that some people don't agree with that and they like to go all in, all out, full take profit, full stop. I can't deal with that. I can't deal with going up 3 R and then getting stopped out without taking any money when I was already up 3 R. And you know what I mean? It just it doesn't make sense to me.
Terrible money management if you do that. You should never let a big winner get away from you. And what I like about partials is you get paid.
Yep.
You're tightening up risk on it, and you're still there. You may not be there with the same type of volume, but you're still there. And if you still believe in the trade and it pulls back, you're recommitting with principal rather than recommitting with profits rather than principal. Right. So why don't we get to taking a look at your setup and tell me what's at the bottom of your chart? What are you using down there?
So this is a trader's dynamic index. It's an RSI, which is this green line, and then 2 moving averages that are applied to the close value of this RSI. And the reason that I'm using that in combination with the exponential moving averages on the top where my candles are is, and this is the way that I rationalize it to my knowledge, is that the RSI takes a lot of price and a lot of its information, not from price, from volume, whereas the EMAs are really gathering their data from price. So by using EMAs here with my candles on top and using the TDI on the bottom, when I can get confluence just of direction for bias with both of them, then I feel a lot more confident rather than just trading EMAs or rather than just trading with the TDI. Using 2 different sources of data helps me feel more confident in these trades. And the systems that I trade are very technical. I have 3 entry signals that I use, and they all have detailed stop loss and risk management strategies for how to manage them as they develop. So a lot of what I do is sitting, waiting, just for that right setup to present, and then I pounce. Like last week, I took 1 trade. The week before that, just 1 trade. So I'm very selective, but with these indicators, I'm able to be picky and really shift probabilities in my favor to have a pretty decent win rate.
So we have a very seasoned audience and community here in FACE, and someone is saying TDI is from Dean Malone. Is that where
I've heard that? I've heard that. I've never worked with Dean and I don't know his company, but people have commented that on my YouTube videos before. I found it just on someone else's YouTube video. I don't remember where it was, just through the videos that I was searching. But
you know what, I'm known for 3 drive formations, and it's like Solomon said, Austin, there's nothing new under the sun. And
never,
I didn't create that. I learned it from a guy, J.R. Hill, in the 70s. And so, that's what's so cool about it is, you
don't need to reinvent the wheel.
No. Who is it? Tony, the guy out here in Del Mar. He's a very famous, positive mental attitude guy. You don't have to reinvent the wheel. You find someone to model yourself after. Can't think of his name. Is it Tony Robbins?
Tony Robbins. Yep, that's who it is.
Yeah, that's who it is. So, all right. So you have TDI and you have the exponential. What about the colored boxes that you have on top? Can you tell us about that?
So the green and red right here?
Yeah.
So this is just where I would, as I was saying before, I would mark up a trade as if I was going to take a trade, where I would buy, where I would put my stop loss, or where I would sell and where I would put my stop. This was an idea that I had right when I woke up this morning. So I start my trading at 5 a.m. Eastern time. That's when my alarm goes off. So when I got to the chart this morning, I really liked what I saw on euro dollar, especially on the daily time frame. It looked bullish. So I created a risk reward setup based on what I call my A1 entry signal. That's just the name of one of my strategies, where I can read a stop loss and I can see potential targets, and then I'll watch that trade develop. Now, this is one of the ones where, number 1, I was just waking up, but 2, looking back on it, probabilities could have been in my favor more. So this is something I really wouldn't put money into when I'm trying to be selective. But still, like you said, I want to see these ideas through. I want to practice and refine my edge consistently. And where I do that best is by generating a lot of ideas to then learn how to be in the best ones and be picky in those. You know what I mean?
Okay. So now you have some numbers inside the small rectangles, like
Yes.
113.85. Is that like a bull bear line for you?
So the 113.85, I don't know exactly what that number is, but the way that I use these is pip measurements. So you see the 318 at the top and the 117 at the bottom. That's how TradingView, this platform, measures pips. So really what this is an 11.7 stop loss and a 31.8 take profit. And I can move this. Now this would be 34.1 pips or 35.1 pips. So it's just a measurement tool basically to see. And then this is the only other number I use on here, this 3. That'll tell me my risk reward ratio. So if I thought it was going to rise to 119.31, I could get 1.94 R there, just about 2 R. And that's how I use that tool.
Okay. So on my RSI, and I'm not using TDI, I'm assuming, I guess I could take a look at it, that at these new highs in the euro here, which is new recovery highs, I'm not sure if we're at new highs yet, new highs for the move, we could be, but I'm pretty sure that I'm not going to have a confirmed high here. Let me just, take a look at mine just for a second. Yeah, we haven't quite made a new high there. So with the stuff you work with, what's going to tell you that
where this could go?
Rally might be getting long in the tooth and it's set up for a correction, even if it's a bull market.
So what I like to use for daily movement potential is average daily range. And a lot of people use average trading range. I just use, it's just one thing that I found on the internet. Like you said, nothing's new. I'm sure other people have used it, but I think that it makes the most sense. What it does is it basically takes the pin high to the pin low of the previous 5 days, all the movement of those days, adds them up and divides by 5. It gives you an average of where this thing normally moves over 5 days. So right here for the euro dollar, the ADR is about 88 pips right now. So what I would do is if I was looking at this as a long opportunity this morning, I would see that ADR line here as a potential profit target around 1.197. And then the other thing that I do sometimes use are just standard pivot points, which again are just based on yesterday's price action. That's how pivot points are calculated. So as we approach the R1 pivot right here, it's a little thin. I can make it a little thicker for you guys. As we approach that pivot, that's where I would say it could slow down. I don't like to use pivots to be like, hey, it's going to hit here and bounce. But I think that I have found more success in sticking with trends using just the 8 and 21 EMA, which is the yellow and red EMA here. And as long as this stays outside the 8 EMA, I would expect it to continue to ADR unless it was to reject the pivot and break down through the 8 EMA. That could start to signal where we see
How's
some
the ATR calculated compared to the ADR?
I actually don't know the exact difference in calculation, but I know that people have told me in the past that they get different numbers. So I am assuming it's different. Yeah.
Okay.
I don't want to speak on it because I'm not,
Okay.
And then the only other thing, average risk. No, I'm sorry. I didn't mean to cut you off. But the only other thing that you would notice on here is these lines back at the start of the day. So what I have here is what we call the Asian session, which is like the Australian and Japanese open. So that sets the Asia high and Asia low for me because I like to see pairs break out of that range before I trade them. If they stay in that range, they tend to be choppy for me more often than not throughout the day. So I can use that Asian range and this TDI and sometimes the EMAs to see where we call it reset or consolidation. That's where I would just stay away from it. You know what I mean? Like, for example, just to give you reference to that, if you look at GBP JPY this morning, there was a long idea here. Inside that Asian range, you see how this formation presented off the red. That's the 21 EMA. So that would be a decent signal for us. But being that it's still inside this range, it's something that on a Monday, especially with the GBP bank holiday today, I wouldn't take the risk on it. So I marked it up, called it an idea, and it's moving higher from there. But yeah, that's kind of how I would use it.
Do you believe in turnaround Tuesdays?
I'm not sure. You know, people say, is that we're like on certain days of the week, things reverse? I don't know. Dale, maybe you could tell me because you have more experience than me. Is there such a thing that every Wednesday I can just reverse it and I'm going to make money? If it's that easy,
you could be on the golf course and come in Tuesday. But I do look for it. I mean, there is kind of a pattern that if you have a strong week on Friday, you'll get followed through Monday. into
Yes.
Tuesday. So, I mean,
Yeah.
sometimes it happens.
Yeah.
Let me ask you, as
Sure.
far as you're in Florida or
Yes.
California? Oh,
Florida.
so you get to sleep in a little bit longer.
Yes,
I'm on
a
the
little
West
bit.
Coast. I get up at
Yeah.
4. So, what would you say? I'm going to ask you the same question that I asked Schwager. What's the most important lesson, advice you could give people that want to become day traders? The most important part of it. A lot of people say, well, risk management. What's Austin Silver's answer?
Systematic trading. If you have just one system, and you have to detail that system with entry signal, questions to ask yourself before that entry signal, stop loss, how are you going to manage it as it moves for you or against you? If you can detail all of that, test it, demo test it, prove it works, back test it, mark it up, show that that repeats, that's an edge. And if you can just get that down, no other strategies matter. It's great that other people make money other ways. All you need is your one. And then that one can, over time, turn into 2 or 3. You know what I mean? And that's what it's done to give me the 3 that I have now. The 1 turned into 2 and 3. 2 and 3 could not be a thing had it not been for 1, so to speak. So yeah,
Well,
risk management's important, but I think
yeah.
the systematic approach to the way you trade is by far the game changer, because otherwise you're basically gambling.
Right. So I tell you, I'm very impressed with some of the things you told me. I also can feel your exuberance and passion for what you do,
Thank you.
Austin.
I love it.
How long have you been doing it now? How many
So
years?
I am, and I am very passionate, and I love everything that I get to do. I'm just very grateful that I can work with people on the internet, especially during the crazy times that we're living through. Like, for me to be fortunate enough to still be able to do this, it's just, I'm very grateful every day, you know?
Yeah.
But I've been doing this now. This is going into my 5th year trading live. I was kind of in that period before that of the life insurance and the learning about trading and getting out of that business and transitioning. And what's been the game changer, I think, too, is I have my girlfriend, and she's 50% owner of my business, 50% owner of the trading business. She's been the game changer too. She also is getting into trading over the last 2 years. So she's kind of getting her feet wet. But I think that motivation and that drive kind of is a big factor to why I love trading so much, why I'm so grateful to be here and be able to continue to make money doing this, you know?
Yeah. Sometimes partnerships, regardless of gender, 1 + 1 could equal 11.
Absolutely. That's
you like that
quote.
math? Huh?
Dale, you need that's a t-shirt, Dale. Come on, man.
Well, Austin, I tell you what, you survived an interview with me, so you know what that makes you?
What?
Yeah? My trading warrior brother.
I like it, man. I'm happy
Right.
very
That's
honored to
another
be called
t-shirt.
that. That's a
could,
I like
let's
it.
go into the t-shirt business.
You know
Anyway,
what? It's so funny. That's so funny, Dale. I appreciate you having me on, man. I hope we could do it again soon. Maybe if you have time, I'd love to have you do a video, you and me, for the YouTube channel that I make.
Sure.
Yeah, that'd be awesome.
Turnaround's fair play with me. I can go either way on a mic. If you know the connotation, it's not
I got you.
the other way, but on a mic,
I got you.
I'm microphone actual anyway. So why don't you show people how they could get in touch with you on Twitter? You're at Austin Silver FX. Maybe you could show your website if you like at this time.
Sure. So Twitter, yep, you could hit me here, Austin Silver FX. This is the best place to get me. Same thing on Instagram. I'm easy to get a hold of. And then our website, it's www.asfx.biz. It's a .biz, not a .com. And that's the best place you can read testimonials. You can see a lot of my videos, all that fun stuff.
Okay. Well, thanks so much for coming in. And, I don't get a lot of day traders. I get people that are, more swing position.
I hope it was exciting for you then.
Yeah,
I appreciate
you know what?
having me.
I like that. I learned from you. I'm going to look into TDI a little bit and
check it out.
And appreciate you coming on, taking time out of your day. I know you have to get back to your people. And I hope that you and your girlfriend and your loved ones remain untouched.
Thank you. You too, Dale. Thank you.
Pips rain down on you, Austin.
Thank you, my friend. I appreciate it. Have a good day, everybody. Thank you for having me.
You're very welcome. All right. So that's a wrap, everyone. Austin Silver FX on Twitter. And we'll see you tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. We'll see everyone tomorrow. Adios.